So, are you new to Canada or plan to migrate to Canada at some time in the future and would love to hopefully own a home for you and your family at some point? Well, allow me to provide you with some information that will help you to position yourself so that you can be able to purchase a home when the time is right. Stay tuned. Welcome to Eye on Mortgage, where we keep you updated on what's happening in the mortgage industry and what you need to know about the mortgage process. Are you a first-time home buyer? Looking to refinance? Interested in a private mortgage? Perhaps you want to know more about purchasing a new build or the reverse mortgage product. Whatever your interest, stay tuned to Eye on Mortgage. Oh, and please take a moment to like, share, and subscribe. All right, so before we dive right into it, please take a moment to click that like, share, subscribe, and of course the bell as well to make sure that you are updated or notified every time that I put out some new information to keep you updated on what's happening in mortgage land. All right, and sometimes I do provide some other information too, but predominantly on Eye on Mortgage, I try my best to provide you with information with regards to mortgages and what's happening in real estate, stuff like that. All right, so let's begin. So, new to Canada, all right? I want to say welcome for those who are already here, right? I'm sure it took some planning with you and your family, maybe even some sacrifices. But the bottom line is you are here and you want to start to put some things into place to possibly get into a home. Well, I would love to be a part of that journey. And so let's begin right here, all right? There are some things that you need to know that, yes, you do need to put into place with regards to being a newcomer, right? And purchasing a property here in Canada. So they have what is called the New to Canada product, all right? And it gives you a little bit of flexibility, all right? And I'm going to explain that to you with regards to, well, not a whole lot of flexibility, but with regards to a few things that you need to know so that you can be prepared and best positioned so that when you're ready to purchase, you are truly ready to purchase. All right, so first of all, you must have a valid work permit in order for you to qualify for the New to Canada program. So you have to make sure, yes, that you do have a work permit or you are permanent, you have your permanent residency. All right, so that is something that you must make sure that you do have in place. Now, in regards to your employment, you should have completed your let's put it this way: you must have worked at least 3 months first in the country or completed that 3-month probationary period. Now, the probationary period does not have to apply if you are being relocated by a corporation. All right. So you might have, let's say you worked in Europe in a particular position and your company's relocating you here in Canada. All right. So in that case, the 3-month probation does not have to apply because, of course, it's not a brand new job, not a brand new employment. You're simply just being relocated from another country to that position here in Canada, or to a position within the company here in Canada. Less, of course, the company is putting you under probation, but 9 out of 10, if you're being relocated from your place of employment into Canada, then of course the 3-month probation does not apply. So now with regards to you having access to putting that 5% down, so I really want you to pay attention here, right, with regards to what things will allow you to be qualified for a mortgage. So if you're putting 5% down, all right, now the first thing is that you should have some sort of a international credit report from the country that you're coming from. But we do know that some countries actually do not have this system set up. So what do we do? What is the alternative when we come across situations like this? And so there is an alternative, all right? Now, because you're new to Canada, of course, you don't have credit. And if you're not able, or if your country does not have a credit system set up where the lenders can take a look to see if they can trust you to lend money to you, what we would use is an alternate credit source. And what that is basically your bill payments. All right. So it can be, of course, your rent payment. It can be a phone bill. It can be an insurance bill. All right. Some sort of a bill that shows that you are paying consistently. All right. Now, here's the thing. All right. Now, that bill payment cannot be paid by your credit card. You can't use credit to pay credit. It can't be paid by a credit card. So if you have, let's say you're paying your phone bill, all right, the lenders will not accept it if they see that you're paying that phone bill by your credit card. All right. So you'd have to set it up as a bill payment from your bank account, not by using the credit card to pay that. All right, so they're testing your credit worthiness, right? They want to make sure that there's some consistency in the way that you're paying your bills, and how they'll be able to identify that, since you do not have established credit here in Canada, is by looking at those bills and tracking it, your payments on your bank statement. So what the lenders are going to ask for is the last 12 months of your bank statement, all right? And in the last 12 months, we should be able, let's say we're using a cell phone, for instance, we should be able to see every month consistently that amount coming out, or that payment for your cell phone coming out. Maybe it's car insurance, all right? Last 12 months, we need to see, of course, in the last 12 months, so we're going to need two bills. So keep that in mind. We're looking for two bills that we're seeing on your bank statement that is coming out consistently for the last year. All right. Remember, you're new to Canada. You don't have a length of history. And if you did, then we'd simply just use your credit report here. All right. So you're establishing your credit. You're in that process of establishing your credit. All right. So what you want to do, once again, of course, is make sure that you are making your payments through your bank account, that it is being tracked, that we can see it. So definitely you want to set up something. If you do have a vehicle and you're making car payments, maybe you came and you bought a vehicle, right? So you're making car payments, or you have insurance payments, all right? Maybe it's a bill. It can be let's say it's your phone bill, right? Or any other bill that is showing that consistency, right, of payments over the course of a year. We're able, or what I would do is ask for you to print out the last 12 months of your bank statement, all right? And that bank statement, of course, is going to show that you have been making those payments consistently. If you can circle those payments or identify those payments when you send it over to me, on this date, there's the payment there, and you'll see it consistently for the past year. All right, I'll send that over to the lender, and they will see, of course, that you haven't missed a payment. There's no NSF, that you've been consistent in that payment. All right, so that is two bill payments, right? On your bank statements, we'll track that. Let's say for some reason, I guess you don't have a vehicle, you don't have insurance, you've been paying your cell phone bill by your credit card, right? But you have been paying rent, and your rent, it shows consistently for the past year coming out of your bank account. It shows on the bank statement, all right? So this option would actually give you, for this option, you'd have to put 10% down. So the first option was 5% down. It allows you to use your bill payments, which is tracked from your bank statement for the last year. All right, that is what we would use, two bill payments. All right, if you do not have that set up, you're not able to show that because you haven't been paying bills. There's no tracking from your bank statement. The other option would be that bill payment as in your rent. All right. And also a letter of reference from your bank, a recognized bank institution. All right. So it would be your rent payment plus a recognized bank institution. This second option is the 10% down option. All right. So that is how it would be set up with regards to if you're not able to provide a bank statement showing, small bill payments coming out for the last year, two bill payments, as I said, because we'll have to track. These are the two payments that they're looking for, some sort of a bill, as I said. So keep in mind, you're getting this information right now. All right. So this should give you the opportunity to start to put these things into place. What I'm trying to do is prevent you from now ready to purchase and now realizing, oh my goodness, I have no bills, or I do have bills, but I'm not making the payments through my bank account. There's no tracking of it. All right. You're getting this information now. It is allowing you now to position yourself, right? So that when you're ready to purchase, that you have the information that is needed. Okay, so typically as new to Canada, the new to Canada product, you have to be in the country for 5 years. Anything beyond that, you fall outside of the new to Canada program. Now, keep in mind, by the time you're 3 or 4 year, you should have already established some credit anyway. Typically, lenders are looking for, 2 years trade line, right? But if you're new and it's only been a year, maybe a year and a half, you don't have any real established credit, this is the alternate way that the lenders will allow you to provide this type of information. When I speak about this type of information, it is the bill payments that I'm talking about, allowing you to show proof of those bill payments. So the first option, as I said, 5% down, right? That allows you to show 2 sort of bill payments showing on your bank statement. If for some reason you didn't have that set up where you're paying your bills on your bank statement and it's being tracked, then the other option would be 10%. And for that 10%, you would still have to show at least one of the bill payment, which would be your rent. So the rent would show, right? And then, of course, a letter of reference from a recognized bank. All right. And that option will give you the privilege to the 10% down. Okay, so these are the things that you need to put in place when it comes to, of course, purchasing a property as new to Canada. You want to make sure that you're properly positioned. Now, just a quick, tip with regards to you're new to Canada, you need to establish your credit a bit. You can definitely find Capital One. You can actually Google Capital One, and Capital One actually allows individuals to rebuild their credit, or those that are just building their credit for the first time. So I'd encourage you put some funds down. It's like a pre-authorized type of credit card. You're putting money down, and then the lender actually allows you to use your money as their money. Right? With Capital One, you'd have to take a look at it. I can't completely remember, but I believe you're sending 100 to them. I think they may give you a credit limit of maybe 200 or 300. Another alternative, if you've already opened up a bank account, you can approach your bank and ask them for the pre-authorized credit card as well, where you're putting 500 down, actually 500 of your own money, and you are using that as if it is their money. After 2 years, when you've established your credit, they realize that, of course, you've been consistent, you've built a great credit rapport with them, they'd return that $500 to you and start using their own money, right? So essentially, initially, it would actually be put in a GIC account separate for the 2-year duration. And once you build that credit with that bank, then they would return those funds to you. I know TD does it. I know CIBC does it. Whichever bank you're with, look into it. So, bottom line, as a new to Canada, you want to try to establish your trade lines as soon as possible. But if you're very fresh, new, a year and a half, there's not a lot of strength in your credit. So lenders, they resort to looking at your bank statement as an alternate source of credit. And now right, what you need to do to position. So once again, I will stress with regards to your bills, you do not want to pay with your credit card. All right. The lenders will not use that. If it's a phone bill that you are using as one of the alternate credit sources that the lender is looking for, where your bank statement is concerned, it can't be something that you're using your credit card to pay. It has to show on your bank statement so that we can identify it for each month. This is what was withdrawn for this particular bill, right? And once again, they need 12 months. All right, so I think that should give you some information with regards to how to position yourself, how to position your credit. Please feel free to reach out to me. I won't be able to provide all the information in this segment here, but if you're looking for additional information to help you position yourself for home ownership, please reach out to me so that I can assist you. Once again, as I said, I'd love to be a part of the journey, of course, in helping you to purchase your home. So definitely reach out to me. All right. We know that, in life, there's always, there's always goals that you put in place, or you should, right? And if home ownership is one of them, the sooner that you start, of course, to put things into place is the better that it will be. So that when you're ready, you are actually truly ready. You're not at that point thinking you're ready and then realizing, oh my goodness, if I knew this 12 months ago, right, I would have put these things into place to make sure that we'd be successful in starting our purchase journey right now. I do also provide mortgage seminars with the full breakdown with regards to credit, positioning your credit, as well as steps regarding home ownership, all the details within, the mortgage products, from amortization to the variable rate. It's so important to be informed, right? And I would love, of course, to provide you with that information. So definitely reach out, because I do believe that once you have the information, you feel more empowered. And when you start your journey, then of course, you'll feel a lot more comfortable in the home purchase process. Please feel free to reach out to me. Any other questions that you may have, or any questions you may have, feel free to type it in the chat, or you can type it in the message, or you can simply reach out, contact me, KJ at RTS Mortgage Financial. You can also find me on Instagram. You can also find me on Facebook, RTS Mortgage Financial. All right, so I look forward to continuing to put out some material for you, to continue to provide knowledge so that you can position yourself and better understand, everything when it comes to mortgage, so that you'll be better positioned, of course, to purchase your home. All right, so thank you so much, and enjoy the rest of your day.